yet another video from Making Investments Simple. So in this video, I'll be speaking about moving average, convergence and divergence. That's also known as MACD, also known as MACD by many analysts. So this is just a short form, and the full form of this is moving average, convergence and divergence. So before you understand this, you need to understand what is moving averages, and I have made a couple of videos on this already. So if you have not watched that, it would be better if you go through those videos first. So let's begin today's class here. So moving average, convergence and divergence. Basically, it's a trend following momentum indicator, and it's also known as it's a leading indicator. And it's calculated by subtracting the 26 EMA, it's exponential moving average, from the 12 period EMA. So now, before I continue in this line, you might understand that we are actually subtracting 26 EMA from 12 EMA. This does not mean from 12 is 12 minus 26 and not 26 minus 12. So what it actually means here is you are actually subtracting 26 period of exponential moving average from 12 period of EMA. Now this may not will be really confusing for you if you are looking at it for the first time. So let me bring the charts for you here, charting, and let me go through here. Let me bring the charts for you here, and all right. So I'm in the charting website here, and I'm in the Nifty chart, daily Nifty charts here. And once you go down here, you will see MACD or moving average here, and the default setting for MACD is 26, 12 and 9. I'm going to explain this one by one, everything for you. So once you select this, you have to click on update chart just to make sure this is available, and this is the value here. So before I give you this value, I have to make you understand these three components here. This is known as the MACD line, this blue line, and the purple line, or you can not exactly purple, yeah, pink line, pink. This number, this value is known as signal line, and this basically is written as divergence, yes, and this is known as histogram. All right, I will explain it to you one by one now. Basically, so these are the three components which you have to understand. First one, MACD line, moving average, convergence, divergence. This is MACD line is basically calculated by finding a number. So one value of this MACD line, this is actually 15.60. This one value, the one comes when the period of 12 period EMA, I'm sorry, from a 12 period exponential moving averages, we deduct 26 period of EMA. So basically, the 12 period exponential moving average minus 26 period EMA. Now it's very important for you to understand this is not 12 days exponential moving average. Now this will change if I click on here. If I click on here, this is on the daily range, 6 months period, on a daily chart. If I change it to weekly chart right now, so in daily chart it is 15.60, and when I change it to weekly charts, this is not 15.60. So this is basically 12 period EMA. From 12 period of EMA, we reduce 26 period of EMA. So this one value, the one number, comes the one line, actually one value comes when 12 period EMA is reduced from when we subtract 26 period EMA minus 12 period EMA. Now, yes, so let me go back to the daily charts here. All right, so here, so this is one value here. All right, that is the reason you will see the indicator as 2612. So basically we reduce from 12 days or 12 period exponential moving average. If you do not know what exponential moving average is, please go and watch my video on moving averages. So from 12 period EMA, we actually we reduce 26 period EMA, and that's how we get a line. So it's basically we are getting a value. So for example, you're opening a shop, and from 12 period, 12 last 12 hours, you actually reduce 26. If you are calculating 26 periods of sales from the last 12 periods, you will get a number from which you would have an idea whether the sales or revenue has increased or not from the last 12 days or last 12 periods. It could be days, it could be weeks, based on the chart which you are put in. So, sorry, this is how we put a MACD line. Now, this is the signal line, and signal line actually means, sorry, this is 9 days exponential moving average of the signal line. So this signal line will actually tell you what is the last 9 days EMA of the signal line, 9 period EMA of this MACD line. So that actually means you have already calculated. So this would not be 0. As soon as it crosses above 0, MACD line is above 0. It actually calculates that there is a momentum. There is a change in momentum and an increase in momentum. Sorry. So what it actually means is the MACD line should always be above the signal line because it's a 9 days moving average. So this will give you an advance. This is an advanced indicator showing that your momentum has reduced or increased, or it is increasing. So if this MACD line is above this particular signal line, that means the momentum is increasing and there is a good momentum going, and there is a buy signal. So basically people take trades when this the difference between these two crosses above 0, because this is always in minus and in negative. But as soon as it crosses 0, above 0, it shows a strength in the momentum. Basically same goes the opposite. If the MACD line goes below 0, that means it is going below the signal line, then it is a bearish crossover. Now many people take trades based on daily charts, weekly charts and monthly charts also. It's based on your view on the market and also based on your trade, whether it is an intraday or a short-term positional or a long-term position. So this will give you an advanced indicator. So coming back, so that's the formula for MACD is 12 period EMA minus 26 period EMA. And so they basically, whenever the 12 period EMA is above the 26 period EMA, and a negative value when so basically, and a negative value when yeah, it's just that whenever it crosses above 0, it goes it shows a bullish momentum, and whenever it crosses below 0, that's a bearish signal. So histogram, basically the third line, basically histogram is the distance between the MACD and the signal line, and the MACD is above the signal line, the histogram will be above the MACD's baseline. So the traders use this histogram to identify when bullish or bearish momentum is high. So basically that's there are crossovers when whenever it crosses it and goes, it's a bullish confirmation, and whenever it goes down, the MACD line crosses below the signal line, it is a bearish confirmation. Even though basically it's known as leading indicator, but there could be places where it could give you a false signal. But again, as I told you, it does give, and that's how your zero line should be considered as a stop loss. Now, divergence, when the MACD forms highs or lows that diverge from the corresponding highs and lows on the price, it is known as divergence. So a bullish divergence appears when the MACD forms two rising lows that correspond with two falling lows on the price, and this is a valid bullish signal when the long-term trend is still positive. Some traders will look for the bullish divergences even when the long-term trend is negative. Now, because that can the signal can change in the trend. So that's pretty much about the basics of MACD, and there is a difference between the MACD and the relative strength. RSI, basically the RSI indicator aims to signal whenever a market is overbought or oversold, and in relation to the recent price levels. And now RSI is basically an oscillator that calculates average price gains and losses over a given period of time. So the default time period for RSI is 14 periods with values bounded from 0 to 100. MACD measures the relationship between two exponential moving averages, as you told, 12 and 26, and then 9 from which the signal line is calculated, while the RSI measures price change in relation to the recent price highs and lows. So that's the definition. More about MACD in my probably next videos. If you still have any questions, feel free to ask, and I'll be happy to clarify them for you. Thank you, and I will see you again on the next video.